Hi everyone, today let's talk about this week's trading plan. As usual, we'll start off by going through the three major indices, starting with the SPY, then we'll go to the Qs, then we'll touch on IWM, then we'll talk about the VIX and how that correlates with the S&Ps, and then we haven't talked about this one in a minute. We have TLT, which is bonds, and then we'll talk about a few individual stocks which are doing exceptionally well versus the market, starting with Lululemon, and we'll talk about CrowdStrike, then we'll finish up here with the overview for XOP, or oil and gas. And then we'll go over my trade ideas and finish up with my current positions in the markets today. I have to say, these are some of my favorite videos to make, and I watch these videos from a lot of different channels every single week, and they definitely help in my trading journey, so hopefully these help you. Definitely like and subscribe if they do, and comment down below what you think of the markets, and make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. Looking at SPY, you can see we had that big rally 2 weeks ago. And over the last week, we went basically sideways, bumping into that resistance line right here at 418 before moving downwards. But we're still sitting in that range, and there's certainly potential that we could get a continuation. But my guess is that we will get a shallow retracement, maybe a fill of this gap that we had here from May 16th to May 17th before we get a continuation. So I'm looking for short-term bearish price action and hopefully a continuation. If we do break through this support zone with the gap here, my expectation is that we will go into this lower support zone closer to that 385 level that we touched here in the middle of May. Moving over here to the QQQ or the NASDAQ, you can see it looks fairly similar except for the fact that we are just above this support level, which did hold all throughout the week, currently sitting at that 305 price level. And if this holds and tech gets a rally, that should pull up the S&Ps. And the next level of resistance would be all the way up here around 325, so that would be a huge rally, which is the lows here from the middle of March. Moving over here to IWM or the Russell 2000, you can see this looks very much more bullish. Had this sliding price action up, and whereas the S&Ps went sideways, the Russell did continue this very slight uptrend and has not hit its heavier resistance closer to that 190, 192 level. Again, if we see a rally in the rest of the indices, I do expect this to rally at least up into that, which does correlate here to this level of resistance somewhere around 194, 195, which is the lows here in February and March. Moving over here to the VIX, you can see this price channel that we've been in here for the daily chart. And we are currently sitting at that 144 EMA, which has acted as some support here in the past. We did have a bounce here in the middle of February, which did cause the market to continue downwards, but it's not always a level of support. As you can see here in the middle of March, we did continue down and then settled down around this support level. If we do get a breakdown here, that should signal a higher highs and higher lows for the market, at least in the short term. And then once we get into this resistance, and then once we get into this support zone around 22, that's definitely going to be an indicator to take profits across the market, as I do expect this channel to continue, find a little bit of support, and then continue higher. And as the VIX continues higher, that will send the rest of the markets down. That is likely to send the rest of the markets down. Moving on here to TLT, or the 20-year plus treasuries. This is the 1 month view, just so we can see the really long-term trends here. Moving all the way back to April of 2011, you can see we had these lows set in, which created this trend that is parallel to these upper levels. And we recently just touched that right here onto May. And so far that is holding. Taking a closer look here on the 1-day chart, you can see we had this big downtrend, broke through it, tested these lows, and since then we've bounced in between that trend line and that level of support. Not sure exactly where we're going to go here, but it does seem possible that bonds could get a little bit of a rally. Usually that's not a good thing for the stock market, but if we see bonds rally, that will cause the interest rates to go down, which should allow the NASDAQ to rally at least a little bit. Moving over to Lululemon, one of the stocks that I expect to outperform the markets. I did talk about this one in a recent video where they said their earnings were going to be very good over the next several years. And that seems to be being priced in here. We see a continued rally sitting basically at the highs. There is some resistance here going back to January of 2022 as well as February and March. But it does seem to be pushing through these levels pretty strongly. The next level of resistance, in my opinion, is around 325, so around $25 of upside if we get a nice little push higher. Moving over here to Salesforce, you can see this is the 1 week view, and it's been on a pretty strong tear all the way since 2004. Had some lows here in 2008 and 9 along with the financial crisis. Since then, it's been rallying super aggressively. Zooming in here, you can see we have the COVID lows, got all the way up here to around $280 in August of 2020, had some pretty decent dips back here into the middle of 2021, made some new highs in November along with everything else, around 312. And since then, it's basically been cut in half, down 50% from top to bottom, all the way down to 155. And since then, we've rallied pretty aggressively all the way up to around 187 or 188. And most of that is due to their really strong earnings. So looking on the one-day chart, you can see we had a pretty decent sell-off into their earnings announcement. And then we had a huge gap up all the way up to almost 190, just short of 190. Then we had a little bit of a cool-off day along with the rest of the markets, but we're still sitting on that support level here from mid-May, which is also a little bit of resistance here from mid-March. But it does seem possible that this could be a change in the paradigm and that Salesforce is still doing very well in this current financial environment. And this certainly looks a lot stronger than the rest of the charts that we've looked at, maybe with the exception of Lululemon, and then of course with the exception of oil, which we're going to look at next. Of course, this gap does create the opportunity to fill that gap potentially at some point in the future. But if it does do that, I will be looking to purchase shares around this 167, 168 level. This definitely strikes me as a zone of support, and I would expect a continuation and a retest of this price level somewhere around $200 in the future. Last but not least, we have XOP, or the Oil and Gas Index. We broke out of this bull flag type structure, creating new highs, and we're currently sitting at basically all-time highs with no resistance in sight until we hit this around 173, 174 price level. This does look like a pretty strong blow-off top type environment. My expectation is that this rally is going to continue until we bump against this longer-term resistance level. Of course, that doesn't mean we're going to immediately reverse. We could have some price action kind of like this, where we just have this slow grind right along that resistance level. But it does seem more likely that this is going to be too extended and that we would get a retest somewhere around this 158 to 159 price level somewhere in the later part of June. So we get a nice little rally into the next couple of weeks, hit that resistance line, and then we would retest potentially in the latter part of June. Moving over to possible trades for the upcoming week, starting off with Lulu. You can see we're trading just above that $300 level. Pretty big option credits in here, a little bit over 2% in potential credit for the at-the-money puts. But looking at the chart here on the Tasty charts, you can see we are trading just above that 155 EMA. Momentum is still slightly bullish here, and I do expect this to go higher. If we did get a nice little dip into the beginning of the week, like I'm currently hoping for, I'd love to sell the 292.50 puts. But realistically, if I have to settle for somewhere around 295 or 297, I do want to sell puts early in the week and get this pretty big credit. If I could get around an $8 credit, a little bit lower, maybe at 297 or 295, I definitely will be looking to take that position with the June 10th expiration. Moving over here to the NASDAQ, one of my favorite stocks to trade right now. You can see huge volume right here at that $300 level, just over 24,000 puts in volume at $300. And definitely a lot of selling going on here at just over 31K at 310 calls. So it makes sense. A lot of puts being sold down here at $300. Of course, you have some pretty big volume on the put side at the monies. Definitely more puts being traded here than calls at this current price. But there is some call volume here at 310. Looking at the charts, this could certainly go either direction. If we do get a dip and it breaks through these moving averages, I would expect no support until we get to this previous level of support around that 295 level, which would be right in the same area as that first lower ATR band. Again, signaling some pretty strong support, in my opinion. But there's always a possibility that we could just get a nice rally right off of this level and hit that 320 level and that resistance on the daily chart right up here. Remember, this is still a bear trend on the daily chart. You can see the purple dots right up here. And that 320 level is right at resistance here with the 322 at the ATR stop loss. Moving over here to XOP, you can see we hit that upper ATR band and rejected. Before we got a continuation on the rally, I want to switch over here to the 1 week view so you can see where we're at. That upper ATR band sitting at 175, right in line with our expectation and the highest level of resistance there. So if we hit this upper level of ATR band, I expect that we're going to get a pretty strong rejection, as I mentioned, and a move lower to some cheaper prices, maybe around that 155 level. But for right now, it seems like this weekly is going to push up and test this upper ATR band. And moving over back to the 1 day view, if we could get a little bit of a retrace into this lower level to sell some puts, that would make me feel better, but it does seem like this rally is going to continue. Looking at my current account values, we're just short of that $60,000 level. I expect that we're going to get a nice little rally up as long as my trades pan out. And then I'm not really trading my Roth right now, and I'm going to leave that alone for at least here for the next month or so. Looking at my current positions, you can see I have 100 shares, which I bought at 308. I did sell puts to get into that position, and I got around $1.80 credit, so we're basically at break even right here at 306.20. Just a little bit of a loss. I know it reflects minus 180, but you get to keep that credit. So it's basically break even, and you have to keep track of your own cost basis. Otherwise, you can see I did sell another put here for Monday at 306 for just over $2. So trying to buy this stock a little bit below 304. But you can see here I also have two calls at 307, which I sold for $3.82 altogether for the two contracts. So just under $2 each for 307. For my shares, there's no possible way to lose money to the upside. If we get a big rally, we could lose a little bit of money on one of these call contracts, but it is a little bit balanced out by these put contracts here at 306. So we would make money on the 306 puts, lose a little money potentially on the 307 calls, and then the covered call effectively between the 100 shares and the one call here. So still slightly bullish. You can see my delta is at 58. So slightly bullish, but do have some bearish positions to help balance that out. Let me know down in the comment section what you think the markets are going to do. Do you think the individual stocks that I'm talking about right now are going to do better than the overall markets? Or are you just sticking with the S&Ps for right now? Definitely like and subscribe if you got any value out of this video. And make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck on your trading and have a great day.